This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today I did nothing for the third consecutive day in a row, simply because the market gave me what I was looking for, but it just delivered it so fast in a manner that I couldn't get on side at all. I couldn't find anything to frame a valid risk-reward ratio with what was presented in price. It just happened way too fast, so I just backed off and I did nothing today, which I'm extremely proud of myself for, because usually this is a scenario in the past where the market delivers exactly what I'm looking for, but I wasn't able to be a part of that move. So then I just stick around late in the morning session and try to fade that and end up hurting myself. Today, my experience got me. Like, I know from the experience of getting reps in through back testing and just seeing these days play out over and over and over again, that I should not be looking to fade this market at all. So as I build more market experience, I'm learning more and more what not to do, what to completely avoid, what days I want to be trading on, what days I do not want to be trading on. Today's a day I do not want to be trading on because it just delivered so fast. It gave me what I was looking for. I wasn't able to be a part of it. It's totally fine. I'm not going to stick around and try to fade that. I'm just going to walk away unbothered. And that's what I did today. So that's a big step, a big improvement from what I used to do on days where I shouldn't trade at all. Like, for example, if we look at the 7th and the 8th, these are 2 days where the market was completely flat. There was nothing on the economic calendar. It was early on in the week, did not show me my model at all, and I dug myself into a deep hole on these 2 days. Down 20 points here, down 36 points here. Now, luckily, I was able to come back from that last week. But today shows me that the market can throw a condition like that at me, and I can do nothing. I can just deflect it. Boom, get out of here. I'm gonna wait. I'm gonna come back another day, a day that's good. But today wasn't really flat. It was only good. Well, it was flat. It was only good for like the first 15 minutes. So let's get into it. So going into today, I did not like how the day was setting up. Did not look ideal for my model because it was Monday with no driver, and so far it was an inside day, meaning it hadn't taken the previous day's high or low. And then also based on the economic calendar, I thought the week was likely to be at a standstill because there's nothing really significant. We really have like a lack of drivers for the most part. If we go to the economic calendar, there's nothing really serious. We do have a red folder, 2 red folders on Thursday, but other than that, we have Fed Chair Powell speaking tomorrow, which is a medium impact event. Usually it's high impact event. And then there's kind of nothing else besides that. But the following week, we have all kinds of stuff going on. So I'm thinking like this week is probably going to be a bit more quiet, because the market's waiting for next week. Next week's probably we're going to get a lot of volatility, a lot of good price action. And so what I'm looking for today and why? Today my bias is bullish with price opening low on the day and smooth buy side it left behind. The drop lower makes it appear weak, but there's no driver, and this is likely to be an inside day. I'd be interested in taking it back inside the range. I'm looking for my bullish premium gap opening setup because of how price has dropped suddenly, pre-market rebalancing this overnight move and left smooth buy side above. Now this is where I went wrong, because I know like this is what I was looking for, right? And the market gave me exactly this. It delivered exactly that. But because the market dropped so suddenly lower pre-market and it left that big fat obvious gap on the 15-minute time frame and that large down candle on the hourly time frame, I'm thinking it could probably go lower. So now I'm thinking it could go higher, it could go lower at the same time. That kind of leads me to my indecisive market approach, where I can't really confidently execute on anything intraday. But with the price action pre-market, I knew that there was no reason for the market to go lower than that. I was still bullish on the day, it just didn't give me anything. So this taught me a lot about how, if we go to the chart, this taught me a lot about how I develop wrong market approaches, because I got into the habit of, it wasn't really a habit, it's just what I noticed over time, over studying market approaches that I got wrong. Usually those market approaches were framed based on weakness in the pre-market session. That makes the market appear weak, and then because of that move pre-market, now I'm thinking that the market should go lower at 9:30. Like, for example, the wrong market approach today would be if the market drops lower pre-market, and that makes me think it's exceedingly bearish, and so at 9:30 I'm looking for the market to reject this gap, something like that, right? But why does this move lower not last? Well, because the daily time frame is clearly bullish, or really bullish on the daily time frame, and look what it left behind. Boom, boom. These highs, very smooth, very clean, Very nice low resistance liquidity left on the way down as the market's dropping down into the discount objective. That was the new day opening gap. This gap is influential because it wasn't really used many times in the overnight session. We opened here, we dropped down through it, and then we traded up through it, and then we tapped it once. So it's only been used a couple of times. Whenever the new day opening gap is only used a couple of times, the market tends to come back to that. So I'm looking on the 4 hour right here, and as this candle is painting bold face down close candle, I'm thinking it's probably going to want to do something with that little separation right there, that volume imbalance, which is the new day opening gap. If you look at the 50-minute time frame, it's the same thing. So the new day opening gap, it appears as a volume imbalance on the 4 hour. So I'm thinking the market could drop into that. I thought this candle would close as a down close candle, and the following candle open, take that candle's low, and then trade for these highs. If we go to my market approach, right? I like how this leaf equals highs, but at the same time, I'm thinking it seems like it should go lower from here. Only because this is painting as a bold face down close candle at that time. So my sentiment is literally being manipulated in real time by the Judah swing that happened pre-market. So the market had drawn back to this gap and tapped it. It could close near here. Price takes this candle's low, then goes for the equal highs left behind. So I was eyeing these highs clearly as the draw on liquidity. I like the smooth highs left behind. But at the same time, I'm thinking it could be setting up a low resistance run all the way to Friday low simply because of what happened pre-market. So you can see how the pre-market Judah swing was literally manipulating my sentiment, making me think that the market could go lower. And that is how I typically arrive at my market approaches or my biases that are incorrect because they're based on action in the pre-market session that makes the market seem very strong or very weak. Now, why did I know that the market was going higher today, or how I knew that? If we look at the 5-minute and we see what happens once the market delivers a new day opening gap, this down candle trades over the gap, but it closed above the midpoint. That's the first sign of strength right there. The second candle takes that candle's low, but closed back above it. That's another sign of strength. And then finally, we have the third 5-minute down candle that took this low and closed back above it. That's my third sign of strength. So now we have the market driving below a previous low twice and failing. And then on this candle, it's a large up candle, displacement back inside the range, closes over this gap too. So now we have an inversion fair value gap on the 5-minute time frame. It tells you there's been a change in the state of delivery. So even on the 1 minute, you can look at this price action on the lower time frame. You can see how it's becoming very jagged. Each time the market drops below the previous low, it fails. Drop below previous low, failed. And then boom, displaced back inside the range, right? So that tells me the market was like 921. And at this point in time, I'm looking at this. I'm thinking, why would it go back down there? It should not go back down there. It should go for what? The smooth buy side that's above. So that's why I'm not thinking that this gap is going to reject the market because of what it left behind and because the daily chart is bullish. I'm not expecting this move lower to last. So it's just simply delivering the discount objective of the new week opening gap, taking sell side below this low as well, right? Doing the damage below there. If we put this on the 15-minute, boom, like that. It's just going below that low to do the damage there, deliver this discount objective. And you can see how for the most part, all the bodies of the candles are respecting this gap. That tells you it's using it as discount array. Except we have 2 candles that color outside the lines. Besides that, everything stays within the new week opening gap. And then boom, displacement back inside the range. At this point in time, I'm thinking it's not going down there. It should not go back down there. The damage is done. 2 consecutive drives below old lows that failed. Above is smooth. I'm not anticipating these to reject the market, but I don't allow myself to trade pre-market. I have a strict rule against that because that's literally how I would torch my account in the past. If I go to my rules, it's over here. Rules, right? Risk rules. Never trade pre-market. So I'm never going to allow myself to trade pre-market. Practicing that discipline. And then eventually, boom, the move happens at 9:30. If we go to today's recording, you can see that at this point in time, I liked that gap as a buy, but I wasn't really sure where I would frame my risk on that trade because the gap was so large and it happened so suddenly. So I'm seeing this, looking at price action developing. All this definitely failed. Low resistance liquidity run all the way to London high. That's extremely smooth. So So eventually I'm trying to frame the risk on this trade. Like if I were to buy this gap, where would I enter? I'd probably enter at the high of it, right? But where would my stop be? Because the gap is so large, it definitely wouldn't be at the low of that gap. It'd probably be below the consequent encroachment of that. So I was looking for this idea, and the market literally never came back to that gap. It just got up and left. So it just got up and left, and that's totally fine, you know? Model's gonna be there another day. Setup's gonna be there another day. I don't have to take it every single day. I just have to consistently execute on it when it's there, when it's afforded to me with risk that makes sense. And that's all I have to do consistently to profit in the long term. The main goal is to achieve long-term consistency. Doing these kind of things this is achieving long-term consistency, but it just takes a really long time because you have to show up and take it day by day by day by day by day by day. Like this is not a good trading day for me. In the past, I would try to make it a good trading day for me and hurt myself in this condition. But now I've reached a new level of maturity where I know exactly how I want the market to set up. I know exactly how I want to execute my setups. So when it doesn't give me that, I'm not going to do anything. And I'm not going to stick around and try to do something else that's not even my model. Like for example, I could think about trying to sell short the market up here once it's delivered this, but that's not my model. So why would I do that? That's not something that I've built experience with. That's not something that I'm testing. That's not something that I'm comfortable with. That's not something that I'm actually trying to consistently do. What I'm trying to consistently do is the one thing that I've settled in on, and it just happened really fast and I couldn't be a part of it. So because it's done that and it's over, then there's nothing left for me to do. Because if I can't consistently repeat that, then it's not something I should do at all. Like sure, maybe I could take like a short scalp up here or something for, I don't know, 20, 30 handles. But is that something that I can do as a steady diet? Is that what I'm consistently looking to do when I come to the market every single day? Hell no. I'm trying to catch the real swing. I'm trying to catch this moving price right here. And that's it. So if it does that without giving me an opportunity to be a part of that, then I'm gone. I'm out. I'm out of there. And that's just a new way of thinking that I've kind of adopted recently. Just from realizing what a profitable month of trading looks like, which was last month, my first profitable month in a really, really long time. All the profitable months before that, though, were just completely luck. This time, it's like, okay, I do this, and this, and this, and that's it. And if it doesn't do that, then I do nothing, and I walk away. So I'm starting to get really systematic and regimented with my market approach, and just everything is extremely defined. Like you can see, I have every aspect of my trading model lined out here, like every part of it, everything. And this is where it all started from. It just started from this page right here. This was the beginning. So I'm just keeping this to remind myself where I'm at in relationship to how I started this entire journey of just setting out to build this model and figure it out and know everything about it. So I'm extremely analytical. I have to know everything about whatever it is I'm doing. Right now I'm trying to be a really good trader with one model, so I have to know everything, every aspect of that model. Because there's a lot of different moving pieces that make up your trading model. You have to be comfortable with everything and every metric with each moving part of the model, like your rules, your risk management, your market approach, your exit, your entry, day selection, frequency. You gotta know all these things. So I'm collecting data around everything, and I'm just doing like a continuous refinement of these things. And then here, of course, here's my playbooks, right? Just working on these things, just really trying to dial in my model. Although I've been really grinding this shit out, I'm starting to feel a little kind of burnt out. I don't like to believe in burnout, but I can definitely feel that shit. You just feel a lot of resistance. It's just a lot harder to work for no reason, and it's really annoying. Starting to kind of get there. I might have to take my foot off the gas a bit and maybe work on something else. But, I mean, that's basically where I'm at. Market did nothing today, and that's about it. Basically learned what the pre-market Judas swing looks like. This is my bearish premium gap opening setup. I learned when this is not valid to trade with, when it's valid to fade this, because this is simply just delivering a discount objective. Judas swing on the daily range, and I know that because of what it leaves behind, and the daily chart's bullish. So that's the main takeaway from today. Other than that, let's check what other lessons we got. So, I mean, I like to extract literally everything that I possibly can out of every single trading session. So why was I indecisive going to the open? It's because I saw the potential for the market to go lower. And I saw the potential for the market to go lower because of the sudden pre-market drop. And then I realized that gap was going to fail. And then now I know when to fade what happens pre-market. And now I know when price is going to run right at 9:30. And now I know what confirms price is leaving right at 9:30. And then now I know why the market doesn't offer a retracement today that usually happens when it leaves those large obvious gaps. I think the reason that it did not offer a retracement was because we had a lack of volatility. We had no injection of volatility on the economic calendar, so it kind of literally just, after this candle right here, after 9:45 on the dot, the market just like turns off. It's kind of crazy how that works, huh? Like at certain times, the market does things. At certain times, it stops doing things. At 9:45, the market just boom, like switches off like that, and the volatility is gone. Why does it do that? That's what piques my curiosity, and that's what I have to figure out. So, with all that being said, this is the end of this video. I appreciate you for watching. I appreciate you for supporting the journey. Hopefully, I shared a few things that you can learn, maybe take away. Hopefully, I inspired you to do more with your trading systems and your processes. And hopefully, you can achieve long-term consistency in the financial markets as well. So, talk to you tomorrow with another trade recap.